Good morning. We want to welcome everybody to the E3 Live Export Sales Report. E3 is our new sponsor, and E3 is Bayer Crop Science Sustainability Program in cotton. We are very happy that they are sponsoring us now. We are for the third week doing this live, and then we'll archive it later. For those of you that can not join us live, we'll be starting in about a minute and a half with the actual releases of the export. Right now, of course, almost starting time. It's the 5th of February. I'm Pat McClatchy with the Ag Market Network. Looking at right now, cotton's down about 20, soybeans up 6.5 to 7, corn is up 2.5, and wheat's up 5. We will tell you that we've got, excuse me just a second. We will tell you we've got the dollar very close to unchanged, crude oil up 124 a barrel, and gold unchanged. The dollar has been the reason for a great deal of volatility this week in the markets. Tuesday we were sharply higher in all commodities as the dollar was sharply lower. Yesterday the dollar moved back up again and commodities sold off. So we're very much needing to watch the value of the dollar and its effect on the markets. So we'll be getting our numbers in just a minute. What we'll do is we'll give you the actual number itself, and then within a minute or two, we'll be getting the breakdown, and we can go over that. Very good numbers last week, and if we have a minute, we'll go over those. Good numbers in cotton, looking for another good number in cotton. Here we are, another good number in cotton. 422,800 bales, another excellent number. We've sold almost 2 million bales of cotton in the last month. That's outstanding. Let's now go to wheat, 397,600. That's a good number. The corn number, 844,900. That's good. Soybeans, 489,700. That's lower than we've seen. We want to look at the breakdown to see when that comes out. We want to see if we saw cancellations with that number. Give me just a minute. We'll try to get this up. Looking at the reaction of the market, cotton's gone from down 20 to up 15, so we're seeing a positive reaction in cotton. Soybeans were up 8 3/4 before the number. Now they're up 3 3/4, so the market is reacting in a negative way there. The corn market was up 3. Now the corn market's up 2.5. It was a good corn number, I think, or a respectable corn number. And we do have the breakdown now. I think corn's probably drifting lower with soybeans. The wheat number, wheat was trading up 6 as the report came out. Now it's up about 5. Looking at the breakdown here, starting with cotton. Just a moment. Just bear with me just for a moment here. Cotton number, 422,800 running bales. That's down 23% from the previous week, but up 5% over the 4-week average. Vietnam took 162,600 running bales. China took 146,500 running bales. And South Korea took 55,700. We continue to see China and Vietnam as our number 1 and number 2 buyers. They've consistently been buying cotton. These numbers today reflect last week's business. So we were still below 60 cents in cotton, and that seems to be the level where we've seen very aggressive buying from mills. Going to wheat. Wheat sales, as I said earlier, 397,600 metric tons. That's down 27% from the previous week, but up 11% from the 4-week average. Mexico took 107,200. Thailand took 55,000, and Japan took 51,700. Wheat up 5 right now, so it's off a little bit. Not much of a reaction, really. Corn, 844,900. That's down 12% from the previous week. and down 22% from the 4-week average. Mexico took 297,000 metric tons. Colombia took 158,400 metric tons. South Korea took 116,100 metric tons. Reaction to the market up 2.5 right now, a small amount under where it was just before the number came out. The bean number was not as good a number from what we've been seeing, 489,700 metric tons. That was down 35% from last week and down 27% from the 4-week average. China took 225,000. Turkey took 81,800. Japan took 81,400. We did have some cancellations, a small amount, but not the larger cancellations we've seen at one point. And the bean market's up about 4 right now. So I'd say on balance for cotton, a very good number for the fourth week in a row. It's showing that there are very good buyers at these low levels for the cotton market, and that's very encouraging. For soybeans, we're not seeing large cancellations. I think that's a positive thing. For corn, we continue to see good enough demand. I think corn is going to be influenced by the dollar and also influenced by soybeans and what they're doing. And the wheat number was a good number. So as we now look, after we've looked at the breakdown, looked at the market, let's just make some comments about what we've seen over the last week in these markets and possibly what to expect looking forward. We're going to begin with soybeans. Soybeans over the last week, at least early in the week, we rallied about 45 cents. We had the dollar sharply lower on Tuesday, and with that, all commodities rallied. We saw the market yesterday up. We see the market again today up, as we see the dollar down a small amount. As far as positives and negatives, the positives are for old crop. We're looking at the good demand. If we continue to see the good demand and we see the market and the dollar stabilizing, we've got a chance to see that market moving higher. Looking at on the negative side of the market, we really have to talk about new crop. The anticipation of a significant amount of acreage going to soybeans this spring is a negative that's definitely hanging over the market. Looking at the bottom line for soybeans, old crop is possible according to analysts, trading at 9.76. Looking at the possibility of that market rate trading back to $10 to $10.20. As I said, if we don't see cancellations and the dollar stabilizes. New crop is on a slippery slope. Probably less opportunity to see good rallies on the new crop. New crop will be facing good hedge selling anytime it rallies. As far as what we're looking at there, you're probably going to see the chance of a 9.80 trade in the November soybeans. And November soybeans right now are trading around 9.59, and probably a little earlier than what is the normal seasonal high because of the anticipation of a great deal of acres going to soybeans. Now let's talk about the corn market. The corn market is, we've been looking at good demand there, and recently we've seen good currency movement over the last week. Corn rallied about 22 cents. Just like soybeans, the rally was on Tuesday. Yesterday we've starting to firm back up, and today we're starting to firm up a little bit more. Looking at what are the possibilities for old crop, we're looking at corn possibly with good demand moving higher. We recently saw a good bounce, as I mentioned, in the corn market off of short covering. Market has been more of a sideways market, but we're still looking for the possibility of seasonals taking corn higher, and think that December corn can rally into the 420 to 430 area. Right now, December corn is actually at about 415. Would advise farmers that if we continue to see seasonal movement to the upside, there'll be some opportunities to look to do some hedging there. Talking about wheat, up until wheat markets had about a 30-cent rally over the last week. Up until 2 days ago, we had sold off about 85 cents. And that's over recent weeks. We bounced off the lows for the same reasons we saw bounces in other markets. Stabilization in the dollar, short covering. Looking at the bottom line, bounces back toward the 540 to 550 level are probably going to be sold. Right now, we've got wheat at around 516. Now let's go to cotton. Cotton market has had a good move up in recent weeks because of excellent meal buying at these lower levels under 60 cents. We think that will continue. If the market does continue to moves back down towards 60 or lower, we'll continue to see good buying. As I mentioned, about a 370-point rally over the last week, almost a 500-point rally over the last 2 weeks. Very strong meal buying. Now we're up to about 2 million bales of cotton in the last 4 weeks total that we've seen in sales. That's outstanding. Same with market effects there. Besides good meal buying, we've been looking at the dollar showing some stabilization, and that's also helped. Bottom line, with all the positives, we think that March can rally back into the 62 to 63 cent level, and right now March is trading in the 61.20 level. We think there'll be support down towards 60 to 60.50 if we move back down into that level. Looking at longer term prospects, with good buying and the chance you could see some speculative buying in the market, it's even possible to see 65 basis the old crop or even higher. There's some talk about possibly 67. Looking at new crop, prices in new crop cotton, December cotton right now are trading at 62.85 to 62.90. This is a very low price for new crop cotton, and the opportunity to attract acres, or let's say the opportunity to lose significant cotton acres from last year, are certainly there at these levels. What to expect there? Expect the market to move back actually into the 68 cent level, perhaps the 70 cent level. Why is that? How can it move so much? Well, let's look at the latest estimates on acreage for cotton and the cutbacks in the 3 major cotton producing countries in the world. First, let's talk about the latest out of India. The latest out of India is they expect to see a 10 to 15% cutback in acres in India, which is significant for India. Then the latest talk in the United States is that we could see as much as a 20% cutback in acres. There's been talk for some time about a 15% cutback, but that talk was when markets were trading probably 3 cents higher. I think the biggest surprise is the latest information coming out of China. There's talk there could be as much as a 30 to a 35% cutback in acres in China. That is truly significant. If we look at this total cutback, it could be 20 to 25% cutback in acres, which is something that the world, I don't think, really wants. It's not in China's best interest to see acres shift so dramatically away from cotton. That's the reason that in the coming months, as we get closer to planting time, we think there's going to be a significant move up in the cotton market to make it more attractive to, at the very least, not lose these significant acres. So from December cotton trading at 62.80 to 62.90, we could see that market trade up into the high 60s. We hear 70 cents is possible or even higher. Based on the cost of production in the Mid-South and the Delta, there will not be a lot of cotton planted. And the latest talk out of Georgia is that based on the Farm Bill and how attractive it is for planting peanuts, is that there will be quite a bit of acres shifted over to peanuts. So that's sort of the view. I think the greatest danger in the world is that in the United States, most of the production possibly could be concentrated in a 14-county area in West Texas. And we've seen out of the last 3 years, 2 of those years, we've had very, very bad weather. I think the pattern for weather in recent years around the world has certainly not been normal. So as concentrating so much of our cotton acreage in this country into a relatively small area could prove to be a problem for the market. I think cotton moves up for one of two reasons into the spring and early summer. Either moves up to attract acres or moves up because it did not attract acres. And at that point, when the market sees these low acres, it'll have to immediately start building a weather premium into the market because it cannot afford to have low acres and bad weather. So that's really it for our broadcast for today. Again, I want to thank E3 as being our name sponsor at the E3 Live Export Report. We appreciate you joining us. We hope you'll join us next Wednesday, the 11th, for our next monthly teleconference that we do with our panel of cotton exports. We appreciate you being with us and hope you'll be with us again next week. Thank you.